So what does this mean for your bottom line? Craig Bolanos, co-founder and wealth advisor at VestGen Wealth Partners, joins me now. Craig, thanks for your expertise on this topic. What do you think here? Is the market more volatile than what we expected under a new Trump administration?
You know, I don't know that the market's more volatile than what people expected, but I certainly think the market has turned out to be more volatile than what anyone hoped for as a byproduct of what we've seen unwind in the capital markets really since the 19th of February.
How would you advise our viewers to respond to this financial roller coaster?
I think the first thing is don't panic. I know there was talk over the weekend in a Fox interview that we could be in this period of transition and maybe there's an outside chance of a recession. But the truth is, I haven't seen too many recessions when we're still creating jobs, have an unemployment rate of 4.1%, and have consumer spending. So I think everyone needs to use this as a professional pause to take stock and make excellent decisions for themselves and their families.
In your opinion, is it likely that we could see a recession this year?
Well, you know, it's what I just talked about a second ago, Natalie. Thank you for asking. I think we're at a point in time where the markets had to reset. If we're using the stock market as a barometer, it's normal that we have a 10 to 12% dip, and that happens every 14 months. That's a correction. We just experienced such. So if history is my guide, and it's the only guide I have, I think the market actions right now are warranted and are a reminder to all of us that if you're a long-term investor, you're going to be fine. But I think the odds of a recession are possible. They're certainly not probable.
What might we see before something like that happens?
Well, if we were to see a recession, you would start seeing economic contraction in so many places. The first place it's going to show up is job growth. And right now, we've had consistently positive job growth for more than 49 consecutive months. The second place you're going to see it is not consumer sentiment, how people feel, but actual consumer spending. And right now, people don't feel good, but their actions are speaking louder than words. And then third, we'll see wholesale cuts to corporate profits. We haven't seen that. We've had some possible warnings about the future, but no wholesale cuts as of yet.
Last question for you, Craig. A lot of people are concerned about these job cuts that are being generated by DOGE, and they're worried about a high unemployment rate coming from that. Could that trigger some type of economic recession or unstabilization of the market?
You know, anytime you don't take a scalpel to things, anytime you take a broad brush, you end up running the risk of having a policy mistake. There's no doubt about that. That even hits home. We have our oldest boy who works in D.C. for the Department of Defense. He's dodging DOGE left and right. So I think it's a concern. But again, that's what I call a possibility, not necessarily a probability, but it's definitely newsworthy. Hence you and I discussing it on a Tuesday morning.
Yeah, and hits close to home for your family, it sounds like. Craig, thank you so much again.